Let me tell you something straight, friend. In this business of speculation, the only thing that pays is catching the big swing. Not the little jiggles, not the daily noise, but the great, sweeping moves that carry prices far from where they started. That's where the money is. That's where the fortune is built. You might scalp a few points here and there. You might take satisfaction in being right 10 times in a row, but it won't mean a damn thing if you miss the one big move that would have made the year. Now ask yourself, are you in this game to keep busy, or are you in this game to make money? I've seen more men ruined by their own impatience than by the market itself. They'll catch a little turn, take their profit, pat themselves on the back, and then stand there watching while the real trend gathers steam and leaves them behind. Why? Because they can't sit still, because they confuse activity with profit. But the truth is, the market doesn't reward the restless, it rewards the patient observer who can tell the difference between noise and movement, between a twitch and a tide. Have you ever cut a profit short, only to see the market run exactly the way you first thought it would? Of course you have. We all have. And that's the greatest lesson right there. The trick isn't just finding a trend. The market will show you those if you learn how to watch it. The trick is staying with it once you've found it. That's the part most can't do. They're too eager, too afraid, too quick to cash in and call it a day. But this game isn't about taking profits, it's about taking the right profit. Do you understand the difference? It's the difference between a day's wages and a year's fortune. I learned a long time ago that the market doesn't care about me, or you, or anyone else. It will move the way it moves, regardless of our hopes, our opinions, or our fears. The only question is, do you move with it, or do you fight it? Most people fight. They argue with the tape. They say, it can't go any higher, or it can't go any lower, and yet it does, over and over again. The market is always right, and the only business we have is to get on the right side of it. Tell me, have you ever argued with the market and won? Now, you can't catch a big trend if you're trying to predict every little turn. The man who tries to pick tops and bottoms will end up with more scars than profits. That's the gambler's instinct, not the operator's method. I've lost enough money trying to be smart at the wrong time to know better. You don't need to buy the very bottom or sell the very top. You need to catch the middle, the fat, juicy part of the move. That's where the money is, so why waste your energy trying to be clever? Let me give you a picture. Imagine a train starting from the station. At first, it moves slow. It takes time to gather momentum. Then it begins to roll, faster and faster, until it's flying down the tracks. That's your trend. If you try to jump on while it's still pulling out, you risk slipping under the wheels. If you try to wait for the very end, you'll find the brakes applied and no motion left. But if you wait until it's clearly on its way, when the motion is smooth and the direction undeniable, that's when you climb aboard. Doesn't that make sense? The trouble with most traders is they want certainty. They want to know beforehand, without a doubt, what the market will do. But there is no certainty. There never will be. The best you can do is learn to recognize the signals when they appear, and then act decisively. The market gives you hints, not promises. It whispers if you listen, but it never shouts. And when you hesitate, when you wait for everything to be crystal clear, the move is half over. How many times have you waited for confirmation, only to find the profit already gone? I'll tell you something that may sound strange. It's not the buying or the selling that makes you money. It's the waiting. People don't believe me when I say that, but it's the truth. My biggest profits came not from the act of trading, but from sitting, from holding my position while the market did exactly what I thought it would do. It wasn't my cleverness that made me money, it was my patience. Can you sit still when you're right, or do you feel the itch to grab your winnings and run? That itch is the difference between a rich operator and a broke one. And let me remind you, markets don't move in a straight line. They'll advance, then pull back, then advance again. They'll shake out the timid, scare the weak, and test the strong. A man who doesn't understand this will sell at the first reaction, thinking the move is over. when it's only just begun. That's why you have to study the character of a trend, not just the price. You have to know what a healthy correction looks like and what a real reversal looks like. Do you know the difference, or do you jump at every shadow? I've seen operators make a good start, only to lose their nerve at the first setback. They say, "I'll get out now and buy back cheaper." But 9 times out of 10, the market doesn't give them the chance. It goes on without them, and they're left watching from the sidelines, sick at heart. That's why I always say it's not your brain that makes you money, it's your stomach. Can you stand the heat? Can you hold on when the market tests you? If you can't, you'll never catch a big trend, no matter how smart you are. There's another trap men fall into. They think they can catch every big move in every stock. But the truth is, you don't need many. 1 or 2 good ones a year, held properly, can make your whole fortune. The rest is noise. That's the beauty of this game. You don't have to be in every move. You just have to be in the right ones. So why spread yourself thin? Why chase every stock that twitches? Wouldn't it be better to wait for the perfect setup, the clear signal, and then drive it for all it's worth? And don't fool yourself into thinking you'll be right all the time. You won't. I've been wrong more times than I can count, but I learned to keep my losses small and let my profits grow large. That's the whole game, really. You can be wrong half the time and still make a fortune if your profits are big and your losses are small. Isn't that a comforting thought? That you don't have to be perfect, only disciplined. Let me tell you about human nature. Men are greedy when they should be fearful, and fearful when they should be greedy. They sell winners too soon and hold losers too long. That's why the market shakes them out time after time. But if you can reverse that instinct, if you can hold winners and cut losers, you've already put yourself ahead of 90% of the crowd. Think about it. When was the last time you held a stock long enough to see it multiply instead of just pocketing a quick profit? Another thing, never forget that trends are born out of conditions, not accidents. Prices don't rise without cause. They rise because the underlying forces are pushing them that way: earnings, demand, money supply, speculation. Whatever the reason, the tape will show it. The tape is the only true judge. Men will argue opinions all day, but the tape never lies. Do you trust what you see, or do you listen to the chatter? I used to spend hours watching the ticker, just watching, not trading. I wanted to learn its language, its rhythm, its mood, and it spoke to me, not in words but in movements. That's how I knew when a stock was being accumulated, when it was being distributed, when the public was buying, and when the insiders were selling. That's how you catch a trend before the crowd sees it. Have you ever sat long enough with the market to hear its voice, or do you rush in and out, deaf to the music? When a trend begins, it doesn't look like much. Just a few moves, a little strength here, a little weakness there. But if you've trained your eye, you'll recognize it. You'll know this isn't just another fluctuation, it's the start of something bigger. That's when you step in. But you mustn't hesitate. The man who hesitates misses his chance, and once you're in, you must give the move room to develop. Don't smother it. Don't second guess it. Just let it work. Do you have that kind of discipline? Now, here's where most men make their fatal mistake. They don't have a plan. They buy because they feel like buying. They sell because they feel like selling. But feelings don't pay in this game. Rules do. Methods do. You must know before you enter a trade how you'll act if it goes right, and how you'll act if it goes wrong. Otherwise, you'll be tossed around like a cork on the sea. Do you go into the market with a plan, or are you just hoping for luck? Let me pause here and ask you something. Do you really want to catch the big trends, or do you just want excitement? Because if it's excitement you're after, you'll find plenty of it in the daily ups and downs. But if it's money you're after, then you must resist the excitement. You must train yourself to be bored when nothing is happening, and patient when something is. Can you do that, or do you crave action too much? I'll tell you a story. Once I was long a stock, and it began to move exactly as I thought. It advanced steadily, with only minor setbacks. But I grew restless. I thought, Surely it can't keep going like this. I'll take my profit now and buy back later. So I sold. And do you know what happened? The stock went on to double without me. Double? All because I couldn't sit still. That mistake cost me more than I care to remember. Have you ever done the same? The hardest thing in this game is not thinking, it's sitting. You can study, you can analyze, you can plan. But in the end, when you've taken your position, the real test begins. Can you sit and wait? Can you ignore the noise, the tips, the gossip, the fears? Most men can't. They talk themselves out of their own trades. They lose faith too soon. And so they miss the very thing they were looking for. Isn't that the cruelest trick of all? Now, don't mistake me. Sitting doesn't mean doing nothing. It means watching, studying, adjusting your judgment as the trend develops. It means being alert, not asleep. It means knowing when to add to your position and when to step aside. A big trend gives you many chances if you're paying attention. But you mustn't crowd it. You must let it breathe. Do you give your trades space to work? Or do you smother them with your meddling? Here's another truth: you don't catch big trends by following the crowd. The crowd is always late. By the time they see it, the best part of the move is already gone. If you're waiting for everyone to agree with you, you'll never make real money. You must learn to act when it feels uncomfortable, when the crowd disagrees. That's where the profit is. Are you willing to be alone in your judgment, or do you need the comfort of company? Big trends don't come every day. Sometimes you wait weeks, even months, for the right setup. That's when most traders lose heart. They get restless, they take second-rate trades just to feel busy, and they end up losing money. But the wise operator waits. He knows his opportunity will come, and when it does, he's ready. Have you ever waited so long that you talked yourself into a bad trade just to end the boredom? And when you do catch a big trend, you must ride it for all it's worth. Don't nibble. Don't take crumbs when a banquet is laid before you. Press your advantage. Pyramid your position carefully, add as the trend proves itself, and let the profits compound. This is how fortunes are made, not by jumping in and out, but by pressing when you're right. Do you build when you're right, or do you sell too soon and rob yourself of the real reward? The market, you see, is like a great ocean. The tides come in, the tides go out. You can't fight them, you can only ride them. A small wave won't carry you far, but a big tide can take you all the way to another shore. The question is, can you recognize the tide when it turns, and will you ride it until it ends? Most men jump off the boat halfway, afraid of a storm that never comes. Have you done that? Now let me make something plain. Catching big trends isn't about being smart. It's about being disciplined. It's about controlling yourself. The market is never your enemy, you are your own worst enemy. Your fear, your greed, your impatience. That's what ruins you. If you can master yourself, the market will take care of the rest. But can you do it? Can you stand aside from your own emotions and act only on the tape? There are times when the market practically begs you to take a position. The signs are so clear, so strong, that it would be foolish not to. But even then, you must size it properly, manage it properly, and sit properly. The opportunity is only the beginning. What you do with it is the real test. Do you treat opportunities like rare jewels, or do you squander them as if they come every day? Think back on your biggest winners. Didn't they all have the same quality? That feeling of inevitability, that momentum that seemed unstoppable. And think back on your biggest losses. Weren't they the ones where you forced it, where you tried to make the market move before it was ready? Doesn't that tell you something? The great moves announce themselves if you know how to listen. You don't have to guess. You don't have to force. You just have to watch, and wait, and then act when the time comes. That's all. It sounds simple, but it isn't easy. Most men can't wait. Most men can't listen. But if you can, the rewards are beyond imagination. And remember this, every big trend ends eventually. Nothing lasts forever. The same forces that drive prices up will, at some point, exhaust themselves. That's why you must watch as carefully at the end as at the beginning. The same patience that lets you hold must also let you exit. Too many men ride a trend up and then ride it all the way back down. They confuse stubbornness with discipline. Do you know when to get out, or do you cling too long? When I look back on my career, the profits I made came almost entirely from a handful of big moves. The rest were scratches, small wins, small losses, but those few big moves, they made everything else worthwhile. That's the nature of speculation. It's not a steady wage, it's a business of opportunities. You wait, you watch, you strike, and when you strike right, you ride it for all it's worth. Isn't that the kind of game you want to play? So, if you want to catch big trends, forget about trying to be busy. Forget about trying to be right all the time. Focus on being right big when you are right. Learn to wait, learn to watch, learn to hold. It's not glamorous, it's not exciting, but it's the only way I know to make real money in this business. You'll be tested every step of the way. Your nerves will be tested. Your patience will be tested. Your judgment will be tested. The market will do everything it can to shake you out. But if you can stand firm, if you can trust your method and sit through the storms, you'll come out richer than you ever imagined. And when you do, you'll realize it wasn't the market that made you rich. It was your own discipline, your own control, your own ability to catch and ride the big trends. Big money is made in the big swings, not the small fluctuations. That's the heart of speculation, the core truth that every operator has to learn if he wants to last in this business. It sounds simple, almost too simple, but most men never grasp it, not in practice. They spend their lives chasing nickels while the dollars pass them by. They're so eager to grab a quick profit that they miss the very move that could have made them rich. Have you ever looked back at a stock you sold too soon and said to yourself, if only I had held it, I'd be sitting on a fortune? Of course you have. We all have. That's the lesson right there. The small fluctuations aren't where the fortune lies. It's the big swing that pays. The trouble is, small fluctuations are tempting. They happen every day, every hour, and they lure the restless trader into action. Prices tick up, prices tick down, and the man watching the tape feels he must do something. He sees 2 points of profit and wants to grab them, afraid the market will take them away. But 2 points here and 3 points there won't make you rich. They'll just keep you busy. The man who tries to scalp every little move ends up tired, worn out, and poorer for the effort. The commissions alone will eat him alive, not to mention the mistakes that come from constant trading. Tell me, have you ever added up how much you've lost by being too active? Now, the market doesn't move in a straight line. It swings, it trends, it surges, and it retreats. Within that movement, there are small ripples and great waves. The ripples are the daily fluctuations. They're noisy, unpredictable, and mostly meaningless. The waves are the great swings. They start quietly, gather momentum, and then carry prices far from where they began. That's where the money is. A man who rides a wave can make more in a few months than another man makes in 10 years of chasing ripples. Which do you want to chase, ripples or waves? When I was a young boy watching the ticker, I made money quickly by catching little moves. I thought I was clever, and for a while I was. But when the market turned, I lost it all just as quickly. I didn't understand the real secret yet, that the small moves can be taken by anyone, but they don't last, and they don't pay. It wasn't until I learned to wait for the big swing, and to hold once I had it, that I began to make real money. Do you see the difference? One method keeps you busy, the other makes you rich. Think about it this way. If a stock moves from 50 to 200, there are men who will take a quick profit at 55, another at 60, another at 65. Each of them will be pleased with their little gains. But the man who holds through the whole move, the man who catches the big swing, walks away with the real fortune. The difference isn't in brains, it isn't in information, it's in patience, in the ability to sit through all the noise and wait for the true reward. Have you got that ability, or do you cut and run as soon as you see a few points of profit? Now, don't misunderstand me. There's nothing wrong with taking small profits if that's all you want. But if you're in this game for big money, if you want to do more than just scratch along, you have to aim higher. You can't let yourself be distracted by every little jiggle. The big swing is what matters, and the big swing only comes a few times a year. That's why patience is the hardest part of speculation. Most men can't wait. They'd rather be active, even if it means losing. They'd rather do something wrong than do nothing at all. Isn't that true of you, sometimes? I've said it before, and I'll say it again, the market is never wrong. Prices tell the story. When a stock begins to trend, when it starts to move with force, that's your cue. You don't need to predict the start, and you don't need to guess the end. You just need to recognize the movement and get in while it's clear. Then you hold. You don't let go for every minor reaction. You don't panic at the first dip. You sit, because you know the big money is coming in the big swing. Do you trust the tape enough to sit with it, or do you get shaken out by every little tremor? The difficulty lies in human nature. Men are wired to grab at profits and fear losses. When they see a little gain, they want to pocket it before it disappears. When they see a small loss, they hold on, hoping it will come back. That's exactly the opposite of what you must do. You must hold profits and cut losses. You must let the big swing work for you. But that goes against the grain of most men. That's why so few ever make real money in speculation. Are you willing to go against your own instincts, or will you follow the crowd into mediocrity? And here's the thing about the big swing, you don't need many of them. 1 or 2 a year, handled properly, can make your whole fortune. The rest of the time, you can afford to wait, to do nothing, to keep your powder dry. That's what separates the operator from the gambler. The gambler wants constant action, constant excitement. The operator wants profit, and he knows profit doesn't come every day. Have you ever asked yourself whether you're chasing action or chasing profit? Catching a big swing takes more than patience. It takes courage. When you see your stock move against you a little, when the market tests you with a reaction, do you have the nerve to hold? Or do you sell too soon, only to watch it take off without you? The market is designed to shake you out, to test your conviction. Only the strong hands hold through the storm. Only the strong hands ride the trend to its conclusion. That's why the big money goes to the few who can withstand the pressure. Can you? Think of the operators who made fortunes. They weren't the ones scalping for a point or two. They were the ones who caught great moves in the market, the great bull swings, the great bear swings, and held on. They didn't waste themselves on the daily ups and downs. They kept their eyes on the main chance, and when it came, they took it. That's the model you must follow. Not the quick, clever trades, but the long, patient ones. Which example will you follow, the gambler or the operator? And remember, a big swing isn't obvious at the start. It begins with small moves, small hints, just enough to suggest something bigger is coming. You have to watch, study, and learn to recognize the signs. The accumulation, the distribution, the steady pressure building. Once you see it, once you know it, then you act. But the action is only the beginning. The real profit comes afterward, in the holding, in the sitting. Have you trained yourself to recognize those signs, or are you still reacting to every jiggle on the tape? I'll tell you from my own scars, the biggest mistake I made in my early years was selling too soon. Time and again, I'd pick the right stock, I'd get in at the right time, and then I'd snatch a little profit and get out. And time and again, the stock would go on to make a great move without me. I was right in my judgment, but wrong in my action. I was thinking about fluctuations, not swings. That mistake cost me more than all my bad trades combined. Have you ever been right in theory but wrong in execution, simply because you couldn't hold? The truth is, you don't need to be clever. You don't need to predict. You just need to recognize when the market is in motion, when the swing has begun, and then sit tight. That's the hardest thing for a man to do, but it's the only thing that pays. Big money is made in the big swings, not the small fluctuations. That's not an opinion, it's a fact, carved into the experience of every operator who's ever lasted in this business. The question is, will you believe it, and more importantly, will you act on it? The real profit comes from sitting, not from trading often. That's the paradox of speculation, the thing that makes most men stumble before they even have a chance. They believe this is a business of constant action, that if they aren't buying or selling every day, they aren't doing their job. But the truth is the opposite. The hardest work in speculation is not in the thinking or the trading, it's in the waiting. The man who can wait, who can sit still when he's right, is the one who ends up with the profit. The man who can't sit ends up handing his gains back to the market. Haven't you ever seen a good position slip through your fingers because you just couldn't leave it alone? It's human nature to want to be busy. A man sitting with a position feels anxious, restless. He sees the market move a little against him, and he wants to act. He sees it hesitate, and he wants to grab what he has before it's gone. But this game doesn't reward fidgeting. It rewards patience. The tape doesn't move according to your nerves. It moves according to its own rhythm. The man who understands this learns to wait, to sit like a fisherman waiting for the big catch. He doesn't keep jerking his line every second. He knows the prize comes to the one who can hold steady. Do you treat your trades like a patient fisherman, or do you tug at them every chance you get? I made my first real money not by jumping in and out, but by sitting tight. I had seen the market break, I knew it was going lower, and I went short. Then came the real test, not the selling, but the sitting. The tape would rally, it would try to shake me out, it would whisper that maybe I was wrong. But I held, I sat, and the market proved me right in the end. That profit came not from the cleverness of my entry, but from the patience of my holding. Isn't that what most traders miss, that the act of buying or selling is just the beginning, not the end? Now, most men confuse activity with profit. They think that by doing something, by trading constantly, they're advancing. But all they're really doing is wearing themselves out. Commissions, mistakes, false moves, they eat up the small gains and leave nothing at the end. The man who trades often may look busy, but his account tells the truth. Meanwhile, the man who sits still, who holds his position while the market moves, sees his profit grow without lifting a finger. Which do you think pays better, endless effort or patient stillness? It's easy to say sit tight, but it's the hardest thing to do in practice. Your nerves fight you every day. The papers scream news, the brokers whisper tips, the crowd talks excitement. Every little fluctuation seems like a signal to act. You tell yourself, I'll take this profit now and buy back later. And maybe once or twice you succeed, but 9 times out of 10 you don't. The market doesn't give you the chance. It goes on without you, leaving you stranded with a small gain while the real fortune slips away. Have you ever cashed in too early only to watch the market keep moving exactly as you thought it would? The essence of speculation is this: profits take time to grow. A stock doesn't double overnight. A trend doesn't play out in a day. It takes weeks, months, sometimes longer. If you don't have the patience to let your profit ripen, you'll never taste the full fruit. You'll always be nibbling at the green, unripe parts. The real sweetness comes to the man who waits. Do you let your trades ripen, or do you pluck them the moment they show color? Men say to me, but Jesse, what if I lose my profit while I'm waiting? My answer is always the same: if you're on the right side, sitting will pay you more than grabbing. The small setbacks, the reactions, the corrections, those are part of the journey. They're the market's way of shaking out the weak hands. If you let yourself be shaken out, you'll never see the real move. The only protection you need is a stop to guard against being wrong in the first place. Once you're right, your job is to sit. Can you trust your judgment long enough to sit, or do you let every tick scare you out? It's important to remember that sitting doesn't mean doing nothing at all. It means doing the hardest kind of work, the work of restraint. It means sitting through fear, sitting through doubt, sitting through the market's tricks and feints. It means resisting the urge to meddle, to interfere, to grab at crumbs when a banquet is coming. That's not laziness, that's discipline of the highest order. Isn't it strange how the hardest work in this game looks like idleness to the untrained eye? Think about the difference between a gambler and an operator. The gambler must always be in action. He can't sit. The wheel must be spinning, the dice must be rolling, or he feels empty. He confuses action with progress. The operator, on the other hand, knows that the money comes not from constant motion, but from waiting for the right moment and then holding. That's why the gambler always loses in the long run, and the operator, if he can control himself, wins. Which one do you resemble when you're in the market, the restless gambler or the disciplined operator? I remember once, in a bull market, I bought stocks that were clearly in a strong uptrend. They went higher, then corrected, then went higher again. Every correction made me want to sell. Every dip tested my resolve. But I reminded myself that the real profit wasn't in taking a few points. It was in sitting for the whole swing. I held on, and the stocks doubled. If I had sold at the first sign of profit, I would have walked away with crumbs instead of the feast. Haven't you had that same experience? Watching your stock run after you've sold it too soon. The crowd never learns this lesson. They will always sell too soon and buy too late. They'll jump in after the move is obvious, then sell at the first sign of trouble. They're forever in and out, forever restless, forever chasing. That's why the crowd loses, and why the disciplined few win. The market was built to punish impatience and reward patience. If you understand that, you're already ahead of most men.